Butch Parrish. I represent District 156. I live down in Swainsboro, and I represent Johnson, Emmanuel, Candler, and part of Bullitt County. I'm glad to be with you today.
Larry O'Neill, represent 146 in Houston County. Delighted to be with y'all today.
And again, I'm David Knight, and I represent this district, District 126. We've also are very pleased to have on our counterparts on the Senate side, and also some local, more of our representatives from here. And I'm going to let Mitch, if you'll start on that side.
Let the senators introduce themselves. Bill, you want to go ahead and start?
Bill Heath, I represent 31st District, which is Harrison, Polk, Foley, and Bartow County, up around the northwest part of the land.
Chip Rogers, and I represent Cherokee and Cobb counties.
I'm George Hooks, and I represent District 14. I won't name the counties. There's 16 counties and 38 taxes. So I'm glad to be here. And Senator Harkin, I hope, has the president left? Well, we want to tell him that we are from a research institution. We both did our undergraduate degree at Auburn University, so we're glad to be on this campus.
Thank you, Senator.
I'm Seth Harp. I represent Senate District 29, which is South Troop, Meriwether, Harris, and North Muskogee County, and I chair higher education. You can see the wisdom of the Senate. They put an Auburn graduate in charge of higher education.
And I'm Mitch Seabaugh, and for many of you that know me but don't know that, but this is like it's being home, because this used to be one of my districts in Spalding County, and this extension here is very, very near and dear to my heart. Really good to be back and see some very good familiar faces in the audience.
John. Papa? Yeah, we got more. Papa?
Judson Hill. Judson, you want to introduce yourself while you're walking up? We were doing introductions.
I'm Judson Hill. I represent East Cobb County and Sandy Springs and Fulton County, 32nd District. Y'all, and also the message, the delivery of food. Senator Ryder, other duties as assigned. We're glad to be down here.
I represent 164 from Savannah.
Representative Yates, represent Fayette, Henry, and Spalding County. 65 years ago, I was a member of the staff here in the Food Science Department. Therefore, we've worked hard to bring the university here. And David Knight and I want to thank all these representatives for supporting us in the budget the last 3 years. It's been a real success. Brother Adams over there in Athens is very happy about it because they don't have any room to expand over there. And like the doctor told you, there's a lot of room here. Thank you.
Well, I want to say thank you to the members for their participation today, and to the audience. And what I'd like to do now is talk about maybe a little background about our committee. I know many in the audience here have been to several of our previous committee meetings, but a little background. The House Comprehensive Tax Research Study Committee was formed this year, and the Speaker assigned these representatives here, and I'm certainly pleased to be a part of it. I want you to know that the experience and the knowledge behind this, many ways and means members on here, many business people here have a great knowledge of the topic at hand, and very pleased to be a part of this. This committee was formed without any preset agenda. We're going to look at our tax system all the way from the state level all the way down to the local level. And we're going to address several different topics. We don't know where we're going with this. We're going to look at the issues, and we're going to see if we can come up with maybe some solutions to these issues. We started with the first meeting that really kicked it off and maybe set the tone. The second meeting was with Representative Richard Royal and Camilla, and we looked at all the tax revenues, the tax sources, all the way from the state level all the way down to our local level and our fees. Our third meeting was with Representative Tumlin and Marietta, and he looked at issues regarding collectability. And from there, that has led into this meeting, the fourth meeting, and our topic today is compliance. And so that's where we stand today. And I wanted to sort of talk about compliance and where I think what it means. You know, everyone has either seen the movie or heard the joke. There's only two things that we must do in life. And one of those things is pay taxes. And unfortunately, that's a necessary, I guess, evil that we face every day. One of the things that, you know, as a government, we all know that there are a lot of public uses, a lot of needs that the government provides, all the way from the roads that you traveled in on today, to economic development in our state, to education from our K through 12 to even our higher institutions of learning similar to the campus that you're on today. And even as many of you return home today, you're going home back to your communities where your local cities and counties operate to provide the services that you need, public service, roads, transportation, and such. So we know that taxes are part of our environment, but I think we also sometimes get and focus on the role from a government point of view of those taxes, and I think sometimes that we forget where the taxes come from. And that's what I want to go back and focus in on today is some of the compliance issues. When I mean compliance, we're talking about the burden to the taxpayer. And from that, we're going to examine at all levels, talking about some of the categories in our code, all the way at our state level down to some of our local, our county, municipal levels, some of the compliance issues at hand, to see if we can examine those issues, see if there are possible solutions, and how do we make this unnecessary evil of paying taxes just a little bit easier on Georgia's taxpayers. So that, I hope, will begin with the scope of today's meeting. And with that, we're going to call our first presenters to present today. First presenters will be Gwen Copeland Hall, the Associate General Counsel of the Georgia Municipal Association, along with Chris Pike, Director of Administrative Services, and James Landham, Assistant City Manager of Griffin.
Landon, who's the seeking to get a flat fee fine add-on so that you don't have to go through and apply 5% here, 10% there, and look at which fine add-on applies to which fines, to have a flat fine add-on that applies to all fines. They would be remitted to the statewide groups. The number is kind of in flux, and there is a Senate study committee that's going to look at this issue this fall. And so we are excited to see that happen. But we do think that there will be better accountability by having a set percentage as opposed to having to determine for each individual underlying fine what the appropriate add-on would be. And again, it would be helpful to cities if the penalty on the court clerks wasn't there. Certainly, they are already subject to criminal liability in the event of fraud or theft or malfeasance. And also, the law allows the Chief Superior Court judge to deal with any ambiguities in the law and incorrect payments, and that should be sufficient. But the flat fee fine add-on would certainly make it easier for local governments to collect and remit those fines to the state and to the appropriate beneficiaries. And if you want to address that from your experience in Griffin, I think that would be helpful.
One of the things that I've noticed is
Use the mic, please.
I'm battling some allergy issues too, so I apologize for that. One of the things that I've noticed throughout the years that I've been in municipal government is how more and more add-ons have been put onto the police fines. It's to the point now where there's somewhere around a dozen add-ons that go onto it. And some are flat dollar amounts, some fines don't have add-ons at all, some are percentage based, and some have various percentage based where it escalates or de-escalates as the fine gets more and more expensive. And that becomes a burden not only for communities that have court clerks, but also keep in mind that a lot of smaller towns, the court clerk is a multifunctioned employee that has to do many other things as well. That compliance issue takes away from other job responsibilities of serving the taxpayers in your various districts. The fines themselves may be as much as 40 to 50% of the base fines, but that doesn't really compare to the compliance issues of having to keep up with all these. If it were to be a flat rate percentage of the base fines and allocate that on a prorated basis to the various uses for those add-ons, it would make things a lot easier for the tax clerks and would enable cities to spend resources on compliance in other areas that are more needed.
Yeah, if any member of the committee would like to ask questions at any time, please speak up.
Just quickly, the 30 to 35% you stated, does that come from a schedule that you have of the 12 fines? Are you confident that 30 or 35% covers all 12 of the add-ons?
It varies, because keep in mind, a smaller ticket that has a fixed dollar would cause the percentage to be higher. So if a $1,000 ticket is a $5 add-on and a $50 ticket is a $5 add-on, then the more $50 tickets you have, the higher that percentage is going to be. The 30 to 35% is a fair number of the total amount collected, and when you compare it to the base fines, it's probably closer to the 35 to 40%. But I think the key that we'd like to stress is that going to a flat percentage, regardless of what that percentage ends up being, it will make it easier from a compliance standpoint than just having arbitrary amounts established for each individual add-on.
When we were talking about what would make it easier for the taxpayer to pay their taxes, the first thing really that came to mind was being able to make their payments online. Obviously, that's a convenience to the taxpayer, and it's certainly easier for the city too. They get the money faster. They don't have to have as much personnel to handle people coming to City Hall. So there are benefits on both sides there. There are certain challenges, one of which is that it can be expensive to set up the programming in order to be able to take payments online. And then another one is that credit card charges can be cost prohibitive. There's typically around a 2% or so surcharge in credit card companies if you allow credit card payments. And that is typically not passed on to the consumer. It's something that the city eats, for lack of a better word, depending on their agreement with the credit card company. Of course, another hurdle is access to internet statewide, and then certainly clearinghouse contracts, although those don't seem to be quite as much of a hurdle sometimes as being able to take payments by credit cards. And just from having tried to set systems up at GMA provides a service where we'll set up systems for accepting payments online on behalf of cities. It is a complicated process and can be kind of cumbersome, so that is a hurdle to it that we are trying to work through within GMA. Mentioned credit card charges, they can vary from city to city. A lot of your smaller cities aren't going to accept credit cards because they can't afford the revenue loss from the surcharge, and even some larger cities and counties, while they might accept credit card payments for water bills and recreation fees and maybe occupation taxes, they typically aren't going to accept them for property taxes just because of the revenue loss that they would experience from that. Online check payments tend to be a little bit easier to swallow. The fees aren't quite as high. Ideally, you would have this offered everywhere, but certainly we need to get to the point where there's more affordable technology for local governments to set up the process, and then also make sure that internet access is available, or it's easier when you have internet access available to everyone across the state. And then again, there is some hurdle with the credit card charge, but that's part of the cost of doing business and something I think the local governments have to explore when they decide what service they want to offer to their taxpayers.
One of the things that we've noticed in exploring credit card payments is, one, it can become an expensive expense if enough people do it. And to make it feasible, enough people need to do it. So you have to consider that. But another item is that most merchant agreements established through the big names such as Visa and MasterCard prohibit a entity from adding the fee that they are charged to the total charge itself. For example, let's say you had a $500 property tax bill. You couldn't go to that person and say, we need another $10 if you want to charge it, because MasterCard and Visa do prohibit that. It gets a little more complicated if you don't want to subsidize the taxpayers' property taxes by paying that fee yourself, because you have to go through a third-party vendor who will charge the taxpayer a fee and then remit the taxes to the local and county governments. It would be nice if we could establish some sort of ability to have the add-on directly assessed to the payment, so that it doesn't cost the taxpayers any more to accept credit card payments, and at the same time doesn't violate any merchant agreements with the big clearinghouses.
Another issue that came up that our folks reported to us was that sometimes when there's a transfer of property, that the information isn't given out to the purchaser about their tax obligation, and sometimes purchasers think that because they've reached an agreement in their real estate transaction that the taxes are paid, but they're not actually paid. And similarly with respect to new businesses, they're sometimes unaware of what their tax obligations are. Some suggestions that were made were, one, to give better notice about exemptions at closing, give better notice to apply for appeals in a timely manner. And one city actually took it upon itself. They send out flyers in their utility bills reminding people, if your tax appeal, your assessment appeals are due on such and such date, your exemption applications are due on such and such date. And that, again, is something that they've just taken on themselves to continue to advertise through their utility flyers. Sometimes a concern that cities have is that they sometimes don't get notice that there has been a transfer of property, and so when they're sending out the tax bill, they do send it to the record owner as of January 1st, even though there might be another owner who would have an interest in getting that notice. And then a final thing is that when counties collect outstanding taxes through tax sales, it can be confusing to the taxpayer, the delinquent taxpayer in this case, if the city outstanding taxes aren't listed as well, because then they might think that when they go pay their county taxes, they've satisfied all of their tax lien, even though there's a city tax lien still out there. And so there could be a redundancy in that as far as collections go, or even as far as tax sales go. Another suggestion, just to try to make it easier for the taxpayer, is instead of making it so that you can only pay your property taxes in one lump sum or two installment payments, is to allow monthly payments with a true-up at the end of the year, so that way there's at least substantial performance. This would certainly be easier for local governments too, as it would save time on preparing notices and making phone calls to collect those taxes, and even going forward with a tax sale. And certainly there is an argument, if the taxpayer wanted to participate in this, that it could make it less painful for them to be paying their taxes. And then the final issue we wanted to talk about is the Taxpayer Bill of Rights. And y'all have heard some about that already, but I just want to mention that it's a concern from city folks too. It does seem to be confusing to a taxpayer. It demonstrates that there's a millage rate increase, which could actually be a millage rate decrease from the previous year. It's just an increase over the rollback rate. And if your property hasn't been reassessed, then your taxes could actually be going down instead of up. And so it actually is confusing to the taxpayer. It sort of conflicts with the information in the 5-year history advertisement. For some of the small towns, if they raise their millage rate and they're not getting say they're getting maybe $10,000 more than they got the year before, running the legal ads and holding the meetings can seem kind of unreasonable to them and to the public when there's not a whole lot of revenue gain to them. And we certainly would be interested in clarifying that information in the notice in order to create less confusion for the taxpayer, and look into seeing what the merits are of having all of the hearings and running the legal ads when the increase in revenue is insignificant over the previous year's revenue. That's it.
Go ahead.
Yeah, can I just question you, Gwen, on the cities, would it help them if a municipal court had the ability to issue FIFAs? Municipal court can't issue a FIFA now, can it? I mean, the state.
That's something that I would need to look into. I apologize that I don't know that answer off the top of my head. I'm not really an expert on FIFAs. I don't know if you dealt with them.
I might be able to address that for you, sir. There again, it gets back to a manpower situation. Most municipal courts are dealing with very limited staff.
Right.
And typically, as you probably are well aware of, when we get into that type of issue, usually that's coming from the county courthouse with a larger staff to handle that, from the magistrate's office, or from a larger court. And many times in our capacity, our staff is so limited on the municipal level for municipal court purposes. We're spending all our time and effort just handling the traffic and code enforcement type issues. And if we got into that, it would add a significant burden to our employees and to our taxpayers, because we would invariably be forced to hire more staff to be able to handle that.
Thanks. Go ahead.
As relates to today and compliance, you talked about the online payments as an issue. I guess specifically to help people, the taxpayers comply, get their payments into the cities, and the roadblocks of that being, the add-on fees that the card companies charge. Isn't that something that business community has addressed over the years? I mean, by volume and so forth, and by the elimination of somebody having to deal with the money coming in. I mean, GMA you being a former mayor, GMA does a lot of things for cities because cities of various sizes in Georgia take on different responsibilities. If we're working on that, is that not something you guys could do as a group to make those things available to medium and smaller cities? Because I know some of the larger cities are already doing that, and the fees that go along with it are really inconsequential when you relate them to the number of people that they are able to reduce in terms of staff. I'm just trying to relate the conversation about online fees with compliance. You're doing that more as to help the taxpayer, if you will, make it easier for them to remit their taxes, because most of the time the compliance at that level is pretty high, is it not?
I think there are a couple of different issues there. First of all, you're correct. Depending on volume, the credit card surcharge can change, and since it is negotiated, and so it's typically going to be higher for your smaller cities than for your larger cities. I know that GMA, through our online program, and I have not been as intimately involved in this as I wish I had been, but they've looked into trying to make it so that GMA was the central point through which these transactions would go. But so far, even for the clearinghouse, that hasn't happened, and I'm not quite sure why it hasn't. I'll go back and ask. The other issue, though, with property taxes, from what our cities tell us, and I live in DeKalb County, and I looked online to see if I could pay property taxes by credit card there, and they will accept online checks, but not credit cards because of the surcharge. But with property tax, too, if your property tax compliance rate or collections rate is up in the high 90 percentile, it's not going to benefit the city quite as much to allow property tax payments by credit card online or possibly even by online checking online because of the revenue loss when they're already getting in the high 90 percentage in collections. But that is something, you're right, that GMA would like to look into. It's, like I said, it's a very complicated process, and if it were easy to put it all in a bundle, I think we'd have gone a lot further than we are, but it is something that we're trying to work on.
Thank you. Appreciate it. We appreciate your presentation. I know a lot of issues with the municipality and their compliance, and we thank y'all for y'all's presentation.
Cities don't have the flexibility now.
We're going to move on to our next presenters.
I think they would.
Our next presenters are we're going to have Michelle Neesmith with the ACCG, along with William Wilson, our Spalding County manager, and Dr. Van Whaler, the Butts County administrator. Now, we'll remind the members of the committee, I do apologize again for the lack of the microphone. So when we're asking questions, let's make sure we're projecting so that everyone in the audience can hear.
Mr. Chairman, members of the committee, honored guests, thank you for affording ACCG the opportunity to address the committee on county compliance issues. Dr. Van Whaler is the county administrator from Butts County, and William Wilson is the county manager from Spalding County, and they'll be giving today's presentation. In an effort to identify county compliance issues, ACCG surveyed several county managers and financial directors and found that the #1 compliance issues for counties involved the submission of the tax digest. Dan Ray, the Rockdale County Tax Commissioner, addressed this issue at the last meeting. So although this issue is very important, and we will be touching on it during William Wilson's presentation, it will not be our main focus because we have looked at this issue previously. In addition to the topics that we've identified, Dr. Whaler and Mr. Wilson will also discuss compliance issues that they have found through their own experience in county management. And now I'm going to turn over the presentation to them.
Good afternoon. I presented to the committee 3 specific areas that I am concerned about as a county administrator, and I summarized those in the handout you should have presented to you today. The first issue is with reference to excess splosh proceeds. The quotation from the OCGA primarily says it can only be solely to reduce or pay off existing debt of the county. If there's no county debt, any excess proceeds must be paid to the general fund to reduce property tax. However, a county may expend those proceeds for some other public purpose that would have otherwise have to be paid from property tax. My compliance concern is, and I apologize to the attorneys if there's any attorneys in the room, However, when you get 3 attorneys in the room, you get 3 different interpretations of how this particular clause is read. And our bond counsel has told us one thing. I'm sorry?
That's optimistic.
Yeah, right. Yes, sir.
Sometimes we get 3 attorneys in the room, we get 6 different opinions.
Yes, sir. What I've indicated in my compliance problem is that for the past 2 SPLOST issues, the county, both in 1996 and 2000 and 2001, 2006, had bonds issued for their SPLOST program. If we attempt to go ahead and use those excess proceeds for that, we would be in non-compliance with the law, SPLOST law, which does not include general obligation debt or any other public purposes not included in the SPLOST referendums according to the attorneys. Our problem that we have at the county right now, I have over $2 million of excess SPLOST money in our funds. Due to this non-compliance ruling, the county will have to spend ad valorem taxes to make general obligation payments over $199,000 plus, over $325,000 for new emergency service vehicles, and over $543,000 plus, not included in the previous approved SPLOST referendum. What I'm asking for the group to consider is to amend the OCGA 48-8-121G to permit all counties to utilize excess SPLOST funds for any public purpose. And I realize SPLOST is supposed to be used for capital, but our major needs is capital improvement. We're a county of 22,000. Right now we have 6% annual growth. We have 1,000 permits issued. The last 3 years, we have lowered taxes 3 years in a row, but our budget has went up $2 million each year. So I take my hats off to the county commissioners for allowing us to do that within our framework that we have. The second issue I have is not as voluminous, but it also is causing us an immediate problem, and that's with the lodging excise tax, which the county can levy on public accommodation charges. And I give you the quotation here where it says the governing authority may levy and collect, etc., for motel inn lodges on a regular basis. Well, I've had some meetings, some attorneys present things to me at meetings. This does not include seasonal lodging facilities, and this does not include bed and breakfast homes, because these things are not regularly used. So they feel they ought to be exempt for this particular provision. At this point, we haven't taken any legal stand on it. However, we are losing over $30,000 annually from the lodging for the last 4 years for the lodging excise tax, because we're not charging anything to these particular people. We are adhering to the law and using monies that we have for Chamber of Commerce activities, historical society things, everything to promote tourism within the county. But however, it's costing the taxpayers that coming out of the ad valorem taxes. So what I've had as a solution was to include bed and breakfast and seasonal lodging facilities and eliminate all references to accommodations regularly furnished for the value. The final issue that I have for you today, which is a real serious problem for us in Butts County, I'm sure that in other growing counties, is impact fees. And I've given you 3 examples of things that we have real problems with. Capital improvements are defined in the law as useful life of 10 years or more. Most of our capital needs we have, especially in the safety area, are 5 years and less. So it puts a real burden on us to figure out how we're going to take care of ambulances, sheriff's cars, and things of this nature. It also says only 3% of the total cost may be used for administrative costs. Any of you who have been involved with any kind of administration particular situation, 3% does not carry you very far of trying to administer one of these particular situations. And it also says impact fees should not be collected prior to the issuance of building permits. We have an existing situation which is causing us some real problems in Butts County. We have a developer who's acquired 2,570 acres of land to develop 3,680 unit golf course community. The county wants to implement impact fees, however, they cannot comply with the previous indicated portions of the law and some other sections which I would allude to some other time. We have done our dilemma impact study on that in order to serve that community just with public safety operations, EMS, fire, law enforcement, animal control, and 9/11. We would have to spend almost $2,800,000 to do that. An obvious way to do that would be to have the developer pay most of that out of impact fees. However, we're not able to do that at this particular point in time. What I'm asking for the committee to consider is to establish a development impact group of local city and county managers to prepare a set of proposed amendments to the law to allow more flexibility for local governments to utilize impact fees for both capital and operational costs. And the reason why I'm saying that is every time you put an ambulance on the road, we have to hire 6 people because of shift situations, because they're 24 hours. In our case, one ambulance costs us $180,000 of personnel costs every time we add an ambulance on the road. And when you have this kind of impact of development to occur, we need some relief, and I think there's a way we could do that if we had some flexibility with the impact fee law. So I'm asking you gentlemen to seriously consider these particular situations. We need your help. All the growing counties need your help. We're here to support you any way we can, but we really need your help in helping us with these revenues.
Mr. Chairman.
Yes, go ahead, Representative Martin.
If I could ask a question.
Yes, sir.
I'm going to go backwards if I can.
Okay.
With the impact fees. Just a question here, because, again, we had these in Alpharetta when I was there, and one of the things that we found with impact fees was, they're a one-time source of money. So I guess would be concerned at a jurisdiction, a county or a city, counting on impact fees for operational issues, even in startup mode, because that money only comes one time. So I hear what you're saying, but when you talk about this $2.7 million cost, are these startup costs for these operations?
That would be that startup cost to include operation and personnel.
Okay, and that would be my concern. I mean, just being devil's advocate here,
Yes.
if I could, if you were to use impact fees for that operational money and count on that, and that money is not there next year because an impact fee is a one-time source of revenue, what's going to happen to the county's ability to continue those services past year number one? And that's something we can talk about, and perhaps that's what you had in mind with that group of folks to talk about exactly how that could be split up as a percentage. But I guess I would have some pause at allowing all the impact fees to go to a county operation, because impact fees were for impact on a community for one-time cost.
Well, my general answer to that is the fact is, as you know, impact fees can only be collected for that area that you collect the fees for. In this particular case, if we had $2.8 million of operational costs in the southern part of the county, any impact fees have to go into a separate fund for that particular situation. And as you know, impact fees aren't going to all happen at the same time, especially if you're looking at 3,000 unit homes going to be coming into a particular situation, which brings another situation I wanted to bring to your attention is one problem we also have with the law, which I didn't point out, is if a developer donates land, donates buildings, we have to give them credit toward their impact fees. Well, the problem is it's nice to have buildings donated, it's nice to have land donated, but if you have to add $400,000 of staff to handle those particular situations, it really does not. County commissioners are wondering, is it really beneficial to do that? Well, we think it's beneficial, but I think there's a way we could work around that. As you know, they have committees and other prerogatives in that law that we have to go through. I just would like to see some more flexibility to allow us to use that money for operational costs in those impact areas. Because if we collect, for example, $200,000 in impact fees for that area, we can't use it in the north part of the county. We can't use it in the east part of the county or the west part. We can only use it in the area where it's collected, and that's where the impacts are occurring.
Well, and I understand, I won't take the committee's time, but the impact fees, like you said, are collected for the impact, the capital impact those new units have into that area. And as relates to the credits, whether they be road impact fees and somebody builds a system improvement, you have to determine that that's a system improvement, not a project improvement. For them to get the credit, you have to decide you want the building as something, or the property that you would have had to otherwise buy. It's a good, I hear what you're saying with more flexibility. I would just be remiss if I wasn't a little bit concerned that we didn't use one-time money for operational things on an ongoing basis.
I understand. That's why I want the committee to get together to talk about these things.
Thank you, Representative Martin. We appreciate it. Dave, Representative.
Thank you for being here. I have a follow-up question related to impact fees and also another one as well related to the splosh use for any purpose. And I'm going to kind of lead you into this because I see a potential disconnect, and it may not be a true disconnect, but if you've got to pay impact fees before your building permit's issued, I think it would be probably a strong discouragement to development in those areas where that is required. Because of this, is developers have a huge carrying cost to finance a project, and if you're going to add in a substantial amount of additional dollars before they actually are receiving income, which doesn't happen until the building permit's issued and whatever they're building is occupied and they're getting rents and things like that, then you're going to send them to other places where they don't have to pay those impact fees. Is that,
Well,
am I got that completely wrong, or is that?
well, here's the problem.
I think you're just going to discourage development in those areas where you have
Well,
that.
right now, believe it or not, we have developers who are wondering why we don't have impact fees. And the reason why I'm saying that is we do not issue any building permits to water and sewer facilities are in. So if they put those facilities in, obviously that's going to probably be a credit because it's only going to serve that particular area, that situation. And so it's not going, in my opinion, it's not going to be a deterrent for anybody to come in there to actually build and do other things. What I'm concerned about is the fact the way that the law reads right now, you can't even obtain any impact fees until permits are issued. That's what the wording says, and that's what discourages them more, the language and the fact that we're willing to work with them on that.
You said it, I maybe didn't hear you right. You said it and that's what discourages?
Right now, the law says primarily is we cannot collect any impact fees at all until building permits are issued. Well, they can't do any building activity until water and sewer is put in. So how do we offset that under the regulations? We need to change the regulations to, per se, make the fact that they can issue building permits, maybe during the same time they're putting in the water and sewer facilities. Certificate of occupancy is something entirely different than building permits. And what I'm saying is that COs would not be issued until the water and sewer, and electricity, everything is all hooked up. But right now, there's no method for us to really collect any impact fees at all or anything because it says it can't be collected until building permits are issued.
My follow-up question, unrelated to impact fees, has to do with, I think you spoke earlier to say a splosh money should be able to be used for any public purpose?
That's what the language says right now.
And you want it to be used for any?
Well, what I'm primarily interested in splosh money, when they say any public purpose, to me that means any capital item that we have available, since splosh is really supposed to be for capital only, we ought to be able to do that. And I'll give you an example. We had 2 ambulances that was not in either splosh issue. We had to replace both those particular issues. We had to use general fund money to go ahead, tax dollars to go ahead and do that, where we have $2 million sitting in the bank, the splosh money. It's a capital improvement. It's something that most counties usually put in their list if that happens to be the ballot. I'm just saying allow us to use that money for other capital improvements that may not be listed in the approved referendum ballot.
I come from a county that just passed a splosh by 124 votes. Representative Tumlin, if that's accurate, 124 votes it passed. And I think the reason it passed, it's Cobb County, I think the reason it passed was they were extremely clear in delineating every single place the monies were going to be used, from sidewalks to you name it. And we also, I'm not sure if this case has precedence in this situation, but Cobb County was also trying to use a prior splosh that was related to education to buy a bunch of laptop computers that made the press all over the place. And that was litigated, and the ruling was, if I'm right, the ruling was since it wasn't clearly determined and set out where the money was going to be used, then that was in violation. I think as it relates to accountability to the taxpayer, we should have a lot of accountability to the taxpayer first off, but we should be accountable to how we're using the money as opposed to just it's an additional tax in addition to your property tax and it's going into...
Well, my concern is not the ballot issue. We've fulfilled
but ours is.
What I'm saying is we have fulfilled all our obligations.
But help me on that.
Yeah, I think this is a good discussion. This is maybe a discussion that we need to get into more detail on a later issue as far as the splosh issue. I think in regards to time of this meeting and the agenda, we probably ought to move on into the next issue.
Well, let me just have one more comment. I'm not talking about the existing ballot. What I'm talking about, the excess money, because we did our homework, we did our work, and we happen to end up with $2 million of excess splosh funds.
Can we give it back to the taxpayer? Is what I'm asking.
Well, the law says it.
I'll let you
we
move
put
on.
it back in the general fund.
I think we need to move on, Dr. Weber,
okay.
to our next topic.
Gentlemen, I want to thank you for coming here to Griffin and Spalding County and echo my chairman and the mayor's comments on welcoming you here. I'll be very brief. There is a handout. I believe it was the last one in your packet up there. It's a simple 2-page handout that relates compliance issues of local concern. Tax digest issues, I know you have discussed those previously, both in with Rockdale County representatives and Cobb County representatives, but I just wanted to bring the fact home here in Spalding County, we're having the same problem. Motor vehicle taxes have decreased over the 5-year period, yet the number of vehicles have increased. We'd like to see if we could re-examine the valuation methodology there. Another thing we talked about, and you've heard before, is the August 1 deadline for submission of the tax digest. That's a local problem here. We also have a local ordinance that sets the due date for Spalding County taxes at November 15th. So maybe you could look at staggering deadlines so that they're all not submitted at the same time to the state based on local ordinances that call for those. Conservation use value assessment. Some small acreage abuse, uniformity from county to county. We get a lot of complaints about how we interpret the law versus our adjoining counties. So I talked with my tax assessor, tax commissioner, maybe looking at an increase in the threshold there. I believe it's 10 acres now, bringing up to a 25, and then review the application process and maybe get some uniformity there that can be addressed over county lines. Timber taxation. The underlying land is difficult to appraise properly and uniformly again from county to county. Identifying and verifying harvesting is a problem. We can't charge permits anymore for logging permits. We can only give notice, so we have a system here where we work that through our Public Works Department into my tax assessors, but something that was done many years ago, just reinstate the satellite technology imaging program to identify harvesting from year to year. Many counties now have GIS systems where they could be overlays and easily identify those areas where timber's harvested. Court fines, I believe it was mentioned earlier today by the city, collection priority for counties. Our revenues are down in our court cases, but our cases have increased. Counties are now lower on the priority list when it comes to being paid out for fines and forfeitures. We'd like to see you take a look at that, see if you could move counties up the priority list. I know with the creation of the public defenders out there in every county in Georgia, they had to have a funding source for that, but that has hampered revenue collections for the counties. Impact fees, the last thing that I'll talk to you about. The procedure of collecting fees within cities. Here in Spalding County, we were able to implement impact fees in January of 2005. It took us until March of 2006 to come up with a satisfactory intergovernmental agreement with the local entity here in order to collect taxes within the city of Griffin. Yet during that time, most of the services we provided with those impact fees are county-wide services, so it's not really fair for the developers to be able to develop and not pay impact fees within the city and have to pay those in the county. Those are just a few of the issues that I wanted to talk to you about today. I want to thank you for coming to Griffin. If you have a chance, take a look at this campus here. It's a great asset that we have. I want to thank you again, like Dr. Arkin did, for all your support with the UGA Griffin campus and invite you back to a groundbreaking that's going to be happening soon on that new $10 million building. Thank you.
Thank you. We appreciate the comments today. Any questions from the panel? Go ahead, Representative Mills.
One question. In reference to the court fines, I believe I heard you say that the court cases are up, the revenues are down. I know the fines haven't come down. So where is the problem at? Is it
the problem we're having is a lot of folks are being placed on probation, as was mentioned earlier, and they start paying the fines, and through the pecking order of the fines, the state, et cetera, gets theirs first. Then they'll go out and violate probation, be back in the system again before the county ever got any money for that. So it's a rotating door there with them, and that's a problem in my state court and my magistrate.
Thank you, Representative. Any more questions? I appreciate y'all's presentation today as it relates to our counties, and thank y'all very much. Our next presenter today, and we're going to shift. We've heard from our counties, our municipalities. Our next presenter, though, is going to be Roger Lane, who's the president of the Georgia Oilmen's Association.
Chairman Knight, Chairman O'Neill, members of the House, distinguished senators, I'll be brief. 2 reasons. Number one, I'm not a tax expert. Number two, I'm being taped. As the chairman said, I'm president of Georgia Oilmen's Association. I represent approximately 250 small independent gasoline distributors throughout the state. We are wholesale distributors, but we also own convenience stores and retail gasoline petroleum products to the citizens of Georgia. Georgia is one of about 22 states that has sales tax on motor fuel. For that reason, that complicates the collection of motor fuel taxes to a certain degree. About 2 years ago, you folks in the legislature passed a law and moved the second motor fuel tax, which is a sales tax on motor fuel, to the distributor level. That greatly increased compliance. I believe I've heard numbers as much as $30 and $40 million more money being collected to build roads and bridges for our citizens of Georgia without any tax increase. I would suggest to you that perhaps, Chairman Knight, we need to look at moving the local option sales tax to the distributor level also. In order to do that, you have to convert the percent to cents per gallon. That is a system that the Revenue Department's doing today. It's working pretty good. When the legislation was passed, I don't think any of us thought the gasoline be retailing at $3 a gallon. But by taking that 4% of $3 a gallon and making that the second motor fuel tax, Georgia now has higher motor fuel tax than our neighboring states of Tennessee, South Carolina, and some counties in Alabama and Florida. There's approximately 7,000 small retailers in the state of Georgia. There's approximately 250 distributors. I think it makes a lot of sense to look at converting the local option to a cents per gallon, the same as you did on the second motor fuel tax, and have it collected at the distributor level. I apologize, my tax attorney is in Kansas today. I pledge give him to the committee, the use of him. We'll work with the committee in any way possible to ensure compliance with motor fuel taxes in the state of Georgia.
Thank you, Mr. Laney. Mr. Chairman.
Yeah, I
Be
want to
easy.
echo what you said, Mr. Lane, and I think you're being a little modest, frankly. The numbers I saw are more than $40 million. It's my recollection that it was your association and your business community brought that suggestion to this legislature. And I want you to know that we're certainly grateful for that. That's been one of the great successes in the last 2 or 3 years. And I concur with you that if we had taken it the one step further, which was a little complex at the time, but I think now we know a lot more about how to do it, and done the local sales tax component at the same time, we would have been better off, and I believe there's still plenty of time to do that. But I want to make sure I understand that what you said, it is your suggestion that we use the same 6-month kind of look-back rule, I'll call it, for common terms, that the Revenue Department now applies to the sales tax, the way it's computed, so that it can be collected at the rack, so to speak. Is that your suggestion?
Collected at distributor level. Yes, sir. Thank you for your comments. So it did take us about 8 years to get that done. It didn't take you very long to get it done at all. I would suggest that we do that same sort of system. One thing that you people in the Senate and the House might want to look at is capping. Right now, the Revenue Department takes the average cost of a gallon of gasoline in the state of Georgia, and they take 4% of that, and that becomes the second motor fuel tax for the state of Georgia and converts it to cents per gallon. That makes compliance very easy. You may want to look at capping that. I don't believe it was the intent of the legislature to raise motor fuel taxes to the level they are today. So I think the system, the technology would work fine, but you may want to look at who knows where the price of gasoline's going. I certainly don't. And we may want to look at putting some sort of cap on it, Chairman O'Neill.
One thought, and I agree with that, and we are exploring those possibilities as we speak. I think that's going to be vital to our citizenry as we move forward with many energy crises right in front of us. But back to the compliance issue of the fuel tax. Aren't there only, how many distributors are there?
There's a
Where this tax would be applied?
by the time we, and I'm not being facetious, by the time we implement this, there'll be a lot less if something doesn't change, but there's approximately 230 licensed distributors in the state of Georgia.
From an audit perspective, that's a pretty small universe to have to look at compliance. That's really the most efficient place to do this part of the computation, in your opinion.
Yes, sir, we would agree with that.
As opposed to 5,000 or 6,000 retailers or whatever it might be.
Yes, sir.
Good question. Mr. Lane, I know a question. We talked about the savings that was out there, the 30 or perhaps even more $1 million from our motor fuel at the state level, but our local options sales tax, is there an estimate out there of what we're losing in compliance?
No, sir, not that I'm aware of. I just think compliance is great, and I think it'll greatly increase revenue.
Thank you. Any more questions from the committee?
Thank you, and thank you for taking the time to do what y'all doing on behalf of citizens of Georgia. Thank you.
Mr. Lane.
Amen.
Our next presenter is going to be Frank Griffin and Ron Douthit, his CPA. We're going to switch gears, and I think we're going in to look at maybe some of the sales tax issues. And I know that as the presentation and as the committee continues to meet, we're going to look at some of the income tax issues, sales tax, payroll issues that I know a lot of our taxpayers, the citizens of Georgia, are very concerned with. So we want to welcome Frank Griffin and Ron Douthit.
Gentlemen, we appreciate your time today, and excuse my voice, I'll make this pretty short. I'm Frank Griffin, and I represent the Georgia Office Products Association. Ron is CPA with MMM Company out of Macon, also representing Georgia Office Products. Basically, our request is that the state collect taxes uniformly from all office machine dealers. At this point, some of us are paying use tax, some of us are paying no tax, and some of us are collecting tax and sending it to the state, which, according to the regulations that I was told by a state revenue agent, is improper or illegal. And basically all we're doing is ask that it's collected uniformly and to recognize that, excuse me, what a dealer in the copy machine business does is he sells, rents, and leases copiers. Taxes are paid accordingly at that time. And we also sell copies. It has evolved to that simple process. And one of the problems that the way it's collected now is the fact that if it's a tax-exempt entity, use tax still has to be paid. We're asking that you let us charge sales tax to the end user that's taxable, and if it's a tax-exempt entity, no tax at all, sales or use tax. Basically, that's it. And we have some information to furnish the state that if you did it that way, you would gain about 40% increase in revenue to the state collections.
Did you bring, I don't know, did you have a handout with
I'm sorry, I didn't.
Ron, from a CPA's point of view or compliance, I mean, anything to add there or elaborate on some of the things that Mr. Griffin had?
I think that one of the cornerstones of any compliance issue is fairness, and the main issue we have is trying to get a level playing field, so to speak, with the way that sales and use taxes are charged in the office products industry here in Georgia. You see, we've gone round and round with this, Frank and I, and we've talked with other dealers in Georgia. Frank's very well connected, obviously, and knows different people, and there's no uniformity in the way that that sales and use tax is collected on this issue, and there is seems to be no uniformity with the Georgia Department of Revenue and how they, under audit or any other examination, charge these taxes and deal with it. So we would just ask that the committee look into this. We'd be glad to get you, as Ms. Griffin said, any information that you need on that, and I can certainly forward that to you.
I would appreciate it. I think the committee would appreciate some more detail in that regard. I know that this is an area that, as a practitioner, we talk about, I think it's been brought up before, clarity and uniformity. It's certainly the fairness to all the taxpayers, but the ease of compliance there. I think when we clarify issues and we make them uniform, they are certainly more, taxpayers are more likely to comply with those rules. So we would certainly appreciate more detail on your particular issues so that we can perhaps look into that, and maybe at the end, I don't know if one of our presenters from the Department of Revenue may even touch on that issue if he's familiar with it. If not, we'll address that subject at another time. Yes, Mr. Chairman.
Can I also ask you, does this apply to leasing sort of arrangements as well as rental arrangements and sales and service the whole? Somebody brought to me some examples of a sales tax that's on an ad valorem tax.
Yeah.
Have you encountered this situation in your business, in your industry?
You mean as far as like sales tax on leasing, if you're leasing a business product, a copier, or whatever, fax machine, whatever, as far as the sales tax charge on the
This particular deal, the lease was like a net lease where it passed the ad valorem tax through to the user.
Yes.
And then the user had
Charge
a sales tax on the ad valorem tax.
Yes.
And I don't know that we have any other examples in the law, in the state law, I know, where you have a tax on a tax.
No, not that I'm.
But is that unique, you think, just to your industry, or would that affect?
It's the only one I've seen it in, Mr. Chairman, as far as in this that we're familiar with. And I don't know exactly what the theory behind the law is. I apologize for that, but you can, if you have, for instance, a service agreement, you lease a copier and have a service agreement that you don't pay sales tax on that service agreement, but the producer or the one who's providing the service does pay use tax on any supplies, parts, materials that are used in that service. But if you own the copier, say if a businessman owns the copier, calls someone to come in and do the service and repair on it, he pays sales tax on those parts and supplies at that point. There's no, I'm not sure what the theory, if it's an ownership theory or what that is behind that, but there's no, it doesn't seem fair that one man pays, collects the sales tax from a consumer and the other one has to pay the use tax when he provides the service and then the parts and supplies.
Thank you, Mr. Chairman. It's a very interesting issue, and I think the committee would look forward to more detailed information regarding this issue, so we can look at this further.
Some documentary examples.
Right,
Yes.
we can do that.
Thank you for your time.
Thanks for your time.
Thank you. So thank you so much for your presentation.
David, we'd love to have those examples too. We'd love to have.
Yes. Yeah, and if you will, enough of the documented evidence for our Senate Finance Committee, please. Our next presenter is Brad Dixon. Brad is a CPA and certainly involved with the Georgia Society. I think the liaison with our tax division. And I know some of the presenters. I'm going to let Brad, if you will, introduce some of our fellow practitioners. I know as a practitioner, there are a lot of issues that we see out as a fellow CPA. Certainly, we look at it from the point of view of the taxpayer's advocate, because I know from the profession that we want to look at it and try to do everything we can to protect the taxpayers. And I certainly appreciate Brad and fellow colleagues here to come and present some of the issues as we touch on some of the different income tax issues in the state. So Brad, if you will, maybe introduce some of our take it and introduce some of our fellow colleagues here.
Sure will. Representative Knight.
If you will, Brad, the big one.
Oh, yeah. Sorry about that. Representative Knight, Mr. Chairman, and fellow CPAs. I know there's probably 4 or 5 among the committee, and to the committee at large. It's a pleasure to be here. I want to introduce, if I can, Keith Early, who is a CPA, and John Masters, also a CPA. We're here on behalf of the Georgia Society of CPAs, and we represent our members at large, and we've polled our membership to attempt to put together this presentation and poll some of the comments, many of which perhaps you've heard. The CPAs here I'm sure have heard before, but I have visual entertainment to go with it, so we'll see how that goes. That's the wrong button. Advance button here. Okay, there we go. This is really going to be a practitioner's approach to compliance, and we want to look at compliance really in terms of a formula. I don't know how to make this little thing go away right there. The formula is that compliance is a balanced equation, if you will, represented with service and enforcement. Both those together equal compliance, and this is a premise that Nina Olson put together in her semi-annual report to Congress Ways and Means, and she is the National Taxpayer Advocate for the IRS. An integrated approach to compliance is one that's preferably a voluntary compliance system in which the taxpayers are willing to work with the tax system versus hiding from it. A voluntary compliance system is one with cooperation versus an enforcement compliance is one really a source of conflict. Enforcement without service minimizes the opportunity to educate the taxpayer and to avoid repeating the noncompliance. On the other hand, revenue gained from enforcement is more easily measurable than that gained from services, which is somewhat of an intangible, at least in the short run. However, we believe voluntary compliance is arguably the most cost-effective way at achieving lasting compliance. The compliance perspective, the cost of compliance, two questions are posed by Ms. Olson. One is, will the taxpayer be able to comply if he doesn't receive a particular service? And then the burden question, even if the taxpayer can comply, will the burden of complying be excessive? I wanted to bring one taxpayer with me, and I wasn't able to do that today, so I'm speaking on his behalf. And I think this one example illustrates both questions. There's a Georgia textile manufacturer, not particularly far from here, who doesn't contemporaneously comply with his Georgia use tax obligation. Now, the state's aware of that, and the state comes in and helps him do it. The state routinely audits the business every 2 to 3 years, determines the liability that's owed, sends him a bill. The taxpayer feels overwhelmed in determining his monthly use tax liability and chooses not to pay for services from his accountant.
Wait, are we hearing that right? That the compliance is basically the cost benefit of the compliance is too much, and that
in the taxpayer's opinion, it's too much, and it's not that far. The issues are not that far different than what we just heard on the office supply scenario. There are many types of materials that are exempt and some are not exempt, and this taxpayer chooses not to hire a full-time bookkeeper to keep up with that, and instead just lays himself at the mercy of the state to do it for him. Now, the result under this is that compliance requires a year-to-year Department of Revenue examination. The department, under their auditing standards, uses estimates and assumptions, which are fairly well proven, but they're not exact. It includes the assessment of penalties and interest and the cost of state examiners to come out and do this. Taxpayers consciously surrendered his rights in not challenging the determined liability and is paying interest and penalties at a rate significantly higher than its cost of capital. So you ask why, and I think Representative Knight just asked me that. The manufacturer believes that the cost-effective services, which means buying somebody else's services, he thinks are not available in a cost-efficient way, and believes the burden of self-compliance is just too great. So is this, I pose the question, is this the right answer? Is the state or the taxpayer effectively served in this scenario? The taxpayer has made an economic decision to perhaps pay too much tax and just avoid the cost of compliance. The taxpayer's only real satisfaction is that the process is ended and the audit period is over, and he can book the right number on his books, and he's said and done with it. That's really the only satisfaction. And he's done the right thing, and he feels good about paying his tax, don't get me wrong. Compliance is impacted by design, by administration, and complexities in the law. Taxpayers, all taxpayers, individuals and businesses, they want certainty in the law, clarity. Georgia's structure is broad-based. It includes many types of taxes, many of which I have never even heard before until I attended one of these meetings, and many layers of tax, which are more layered than I also thought. Georgia's tax system is good. It's factored into the bond ratings that we enjoy. Our system is progressive because it's measured on the success of and health of our economy, and that's a good thing. It's a system that results, a good system results in effective administration by both the taxpayer and the state, no doubt. So we saw the equation earlier. This is from my math days, this is the, contrapositive. So if compliance equal service plus enforcement, and the question is, does bad service and bad enforcement equal non-compliance? And I think the answer is yes. We'll talk about notices. What I'm going to do now is try to hit on a number of drill down topics and pose an issue or several issues, and then propose some suggestions, which I'm more than happy to go into further detail if you wish. And the categories at the top: taxpayer notices, poorly worded and unnecessary notices erode public confidence in the state, and also in tax return preparers, because the client, if you will, if they're hiring somebody, doesn't know who made the mistake. Result in wasted time and expensive resources being utilized. They result in hardships where refunds are delayed, particularly for elderly and disadvantaged. Refund delays resulting from poor notice filters, which is the software designed to review or delay a taxpayer's tax return, can create systemic problems for taxpayers, and particularly those that have larger than normal Line 9 adjustments, which is the adjustments between federal and state taxable income or itemized deductions. There are several examples brought to me and others where retirees had, for example, mostly tax-exempt Georgia bonds as their source of retirement income. Large, obviously, large Line 9 adjustments. They had large itemized deductions because of a serious illness. Her refund was denied until she provided documentation of the adjustments. And we believe that's inappropriate. And it probably could have been resolved at a fairly easy level of concern. There's other examples of retirement income being disallowed just because of a missing birth date. Some of the returns I saw, there was no birth date. Some did have a birth date, and the state had it in the prior tax return, but they still generated notice. The person was, in their 80s, not even close to the retirement exemption age. There are examples of notices where the DOR didn't pick up wage withholding. Prior year overpayments is fairly common error being applied in the next year, not getting credit for that. And the question I have is really not known how many taxpayers are just afraid of tax authorities, and they'll send the money to avoid conflict. That's an unknown quantity. Suggestions I have is that, and some of these are in different stages of implementation, I'm aware of that. The DOR, Taxpayer Services Division, and the Compliance Division management have agreed to approve the filter and the notice templates jointly, not have one division do it absent the other's input. We've suggested also that they consider an outside party, such as the Georgia Society of CPAs, to review the templates in advance. We'd like the notices to be clear and if you will, kinder and gentler if possible. We'd like to enhance or encourage the legislators to enhance resources so the DOR can further automate its withholding processing function, which I'll talk further about. On the processing side, there have been delays, and I can't tell you if 2006 tax season was necessarily worse than in prior years or necessarily better, but some of these are ongoing. Delays in processing, particularly refunds, can hurt people. There are examples where the state is not complying with its own law to pay interest on refunds after the 90-day period, which is not the later of 90 days from the due date or receiving the return. There are situations where taxpayers who didn't get the interest obviously didn't know to ask the question or challenge that, and in other cases, when a call was made, we had to ask for it, ask for the interest. The suggestion we had was establish a taxpayer advocate to monitor this performance. And that advocate obviously would be in the Department of Revenue, I think, to determine compliance. E-filing is another serious area, and it's also a very, very important area that is the Georgia Society condones, and we're pleased with e-filing. I think it's no doubt the way to go, and we highly endorse that. But there's one issue that's been going on for 2 or 3 years, and that is DOR has not addressed the requirements to provide attachments or support documentation to e-file returns. As a result, returns that require attachments are either not eligible for e-filing or they're rejected by the state, or they result in all that results in a significant compliance problem. Some practitioners, unfortunately, threaten not to no longer e-file for clients unless this is taken care of. It's embarrassing to them and to their clients. Georgia's participation in the national e-file program, in our opinion, is not well coordinated, and I'm not sure who's in charge. And this comes from informal discussions with the IRS National Liaison Office, and Georgia doesn't seem to be as active as I think that we should be. We're a premier state, and I think we need to be more active. Suggestions also that the Department of Revenue revise its policy for mandating documentation on e-file returns, or come up with a Georgia Federal Form 8453 equivalent. That's a form that says, okay, I'm going to e-file, but within 3 days I'm going to send you the paper forms of these attachments that you're not able to process. So the permanent answer to e-filing, I think, is ultimately, and Georgia I know wants to go to that, is to accept digitized attachments, and I guess the feds will take the lead on that, but I'd like for Georgia to be a participant in this process and not merely an observer. I'd like for DOR not to deny processing where its own system is incapable of handling these attachments. And I'm talking about state tax credits, I'm talking about elections, talking about brokerage, gains loss on sale of stock, all the things that are not necessarily included in a return, but they're required as an attachment. On the business side, we have some service issues also. We think there's poor service on corporate refunds in general, not always. Taxpayers and practitioners have to call in on corporate refunds. And the call-in requires that each time you define what your refund's all about. Sometimes it takes several calls. It takes 18 to 12 months or more to process a corporate amendment or refund. The call center will route the calls based on the nature of the claim. So if you have a credit, if you're filing a refund or amendment for a credit you missed, or you have a net operating loss carryback, or you have some other adjustment, or both, then the call is routed to the appropriate person. Now, if it's or both, then you really have a problem because we don't know who that person is, and the call doesn't get handled, we don't think, timely. Simple suggestion, just if possible, automate the website like we do for individuals just to show the status of corporate refunds. Simple answer, I think. We think there's some inefficiency in the business credit programs that are offered. Georgia has a lot of credits, and some are more effective than others, but the ones that require approval by different departments, for instance, the jobs training credit requires approval by the technical and adult education coordinator. We think that idea maybe is ineffective or inefficient. We should just file it without doing that and have DOR process the credits and then audit the credits under their own examination plan or or change the examination plan if they wish. Consolidated return rules, these were changed by regulations in the last couple of years, and it's unknown to us as practitioners whether or not those changes were successful, i.e. increased compliance. The new post-apportionment consolidation, under that new set of mechanics, some win and some lose, which is probably okay. I don't think it drives a behavior. I don't think necessarily it changes behavior by the new rules. Now, there's added compliance in the disclosures, particularly when filing the returns. There's redundancy in the net worth tax returns. Now, without boring the audience entirely, but when you file a consolidated return, which is a group of companies filing under one large return, each return or each company has to file a separate return, and then that return is rolled up into a large consolidated return. And that's where the tax is computed at the consolidated level. Therefore, you can offset losses and income between the members. Each separate company, however, has to pay a franchise or net worth tax. And the mechanics of doing that is very arcane. We use sophisticated software to do it, and our software can't comply. We have to pretty much manually do it the way Georgia wants it. I think it's can be fixed. And there's also a likelihood that you will double up on your net worth tax because the parent company pays it separately, and they also have the investment in the subsidiary included in their numbers, and it results in the potential for double taxation. Significant cost of compliance. In the first year, we mentioned that. There's significant disclosures, which arguably keeps people from wanting to do this. NOL tracking is complex under the new rules, and as a result, there's a greater chance that net operating loss carryforwards could be doubled up and taken in a second year when it was already used in the first year. The suggestion is that we simplify the disclosure requirements, that we modify the net worth tax, separate net worth tax returns, and that we consider reporting NOLs and credits differently under the new rules. This would be a long study and long discussion. That's all I want to say on that. This was mentioned earlier. I don't want to spend too much time on this. Georgia moved to, I think, a progressive single-factor sales formula last year. Just pointing out that diminishes the value of some credits because now those credits are maybe worth potentially as much as a third what they were before, which may in fact harm some businesses that moved here comparing the U.S. or rather the Georgia tax to other states' taxes. My suggestion there is not to particularly change the credits, but maybe look at the limitation carryover for credits and also examine the possible sale of credits, which also is a revenue-generating event for the state. Other states are doing that. Whether you agree or not, I think we all should consider it. Another issue is just credits of other states' taxes on income. The DOR definition of which states impose an income tax on a pass-through entity or impose tax measured on income is not always clear. And what I'm getting to is the credit for other state taxes. You get a credit only if it's an income tax. It's not clear in today's world which states have an income tax because there are so many states that have different forms of tax that may look like an income tax, but arguably they're a franchise tax or vice versa. So we're requesting that there's specific guidance, for example, in a Michigan single business tax. Texas has a new gross margins tax. There's an Ohio CAT tax, commercial activities tax. States like New Jersey and California have a minimum tax. You have some taxpayers that pay a little bit income tax, or they pay the minimum tax, and you don't know, well, is all the minimum tax an income tax, or is none of it an income tax? And the Attorney General has issued guidance in the past. We just think it needs to be brought up to date and made public. On the income tax front, I think Georgia's nonconformity, whenever it exists, is the result or can result in noncompliance because people either intentionally or unintentionally don't make those changes. And for example, depreciation differences in the Georgia law and the federal law, there's differences in itemized deductions. And the more of those differences you have, the more likelihood that there's non-compliance. In our opinion, non-compliance may be higher among individuals and businesses not using return preparers, particularly Georgia CPAs, right? So nonconformity is troublesome. It's, I think, more troublesome where there's a permanent difference in the Georgia law and the federal law. Some of the things are timing differences, and we're maybe paying too much tax in one year and not the other. But if it's permanent, like the new Section 199 production deduction, it's problematic. And the 199, since Georgia does not adopt 199, contractors may pay more tax in Georgia because of that. So we suggest that nonconformity be a rare exception. We'd like to enhance, and I'm sure the Department of Revenue would too, their resources so that they can view a digitized return at their call center. And perhaps we're getting to that point, but as of most recently, they were not. You call in, and the call assistant, I think, sees kind of maybe it looks like an old DOS screen of information, which I guess mirrors most of the items on the front of the 500 form, but not all of them. This results in inefficient callbacks, and particularly on the CPA front, when a practitioner calls in and the taxpayer's authorized discussions with the return preparer, there's a box on the front of the return to authorize that. At least in 2005, DOR couldn't see that box, and they wouldn't talk to tax return preparers on the behalf of the client. So highly inefficient. The suggestion there is that we digitize the image of taxpayer returns. We reduce call wait time. Again, I really believe service equals compliance. And when you frustrate people, that it harbors bad feelings and the unwillingness to comply. We also suggest that DOR include 2 contact names on every notice. Some states are doing that. Some IRS notices do that. And this would be a notice where your return's being reviewed, and you have you'd like to submit information or call about it. If you can't get the person on the notice, put a second name or a manager on there. We think the DOR website is excellent, all in all. Could be better. We've seen huge improvements. We'd like to suggest that the website become a library to itself. Other states are doing that. I know it's expensive, and as CPAs, we pay a lot of money for libraries, and sure would be nice, and I think it would help particularly businesses not in Georgia to review the code, the regs, rulings, notices, AG opinions, court, all that kind of stuff on the website, which other states do, and more interactive forms. We're sure getting there. I would like to see more of that. On the withholding tax front, I think there's insufficient, no doubt about it, there's insufficient automation of the withholding tax processing at the Georgia level, and that's both for W-2 employees and also for non-resident shareholders and partners. And that's another resource that is a huge, huge need to enhance compliance. This issue on withholding tax deals with non-resident members in limited liability companies and S corporations. Georgia has a very, very broad set of rules as to how a partner that's invested in a partnership doing business in Georgia, how the partnership must comply with that non-resident partner's income tax liability in Georgia. And we believe that Georgia has probably too many rules and regulations in this area and not enough processing on their end to take care of what's already there. The new regulations that have just come out, they actually require the partnership to withhold on both actual distributions to a non-resident as well as their distributable income, which is their phantom income or income that's earned but not distributed. We think that's overly burdensome. The withholding due date to actually file the withholding and pay it is January 31st, which means that you have to close the books and calculate the tax liability within 30 days. We think that's overly burdensome. We'd like to suggest there be a revision in the withholding rules to go back to the multi-state tax commission model, which Georgia used to have. We would possibly encourage consent statements in exchange for that, which are already in place for S corporations. We'd like to revise the due date for the withholding form to be synonymous with the due date for the business tax return, March 15th or April 15th. We'd like to revise or suggest we revise the composite return option for non-residents to allow all non-resident individuals to file a composite return. Georgia doesn't allow a composite if the member has other Georgia-sourced income. On the estimated tax payment side, we think that there's a trap for the unwary for taxpayers that use the Georgia form to calculate their estimates. And the trap involves a taxpayer that has credits in the prior year and they expect credits this year on their return. The form allows you to calculate your estimated tax payment based on your net tax liability on a look-back basis after the credits. This is the ES form. But at the end of the year, when you do your taxes, the Form 500 UET doesn't look to the same line, and therefore you get calculated with an underpayment penalty based on your prior year tax before the credits. We think that's an error, and I think the forms are just outside the statute. So we recommend that the forms be corrected and the instructions agree to 78, 48, 7, 120. On the personal property tax side, we're drilling down here. We heard earlier, and this is just a repeat, but we think that the various county filing dates for personal property tax returns is confusing for multi-state businesses. And if we just standardize the date, and again, I'm looking at it from when we have to fill out the return and mail it in. I know when you work backwards to from the tax rolls and everything else, there's reasons for the way the law is, but the starting point should all be the same in our opinion. We'd like to see more standardization. The form, it has been standardized, and that was great several years ago, but there's still inconsistency in some of the definitions. It leaves the potential for double taxation on a plant that has a HVAC unit, and you put it on the form as personal property, and then you get assessed as a plant that has an HVAC unit or an air-conditioned plant. I mean, the likelihood for paying double tax is great. We just like to see more. I'd like to see Georgia take the lead with those definitions, and the counties adopt them. The license and occupational taxes are all over the place, and there's little publicity oftentimes for where to go. And again, we'd like to see this standardized. We'd like to see Georgia take the lead, maybe in creating some standardized forms to help comply. And the last suggestion on this slide really is a new tax or a replacement tax, which I know may be politically unpopular, but a lot of northeastern cities or midwestern cities have a occupational tax on net profits as opposed to a license tax. But it's easy to comply with, and we think it's all done when you file your tax return, and it's a simpler way to do business. Centralized registration, we acknowledge there's duplication of registration by businesses. We'd like to encourage one-stop shopping and have a link from Secretary of State website, adding corporation to DOR, have them share information. This could be a long discussion to itself, and I'm not prepared to go into all the details, but it seems like the direction we ought to go. Self-employed contractors may be the largest component or one of the largest components of the tax gap. You know, we all perceive that a lot of these self-employed contractors are either not in the tax system at all or only partly in it. We think state licensing, permitting, and business license are burdensome and not easily conform. We think a cure to some of this is standardizing the information system to allow information sharing and ease of compliance. Suggestion is that we require reporting by the county to DOR on permit issues and types of construction over a certain threshold. So this would be some upward reporting based on the permits. We think DOR and Secretary of State could share information on its contractor base and on taxpayer ID numbers. We think these procedures could be applied with some minimal imagination to other licensed occupations that are perceived as poor compliers. And I'm going to turn it over to Keith Early. He's going to address some more sales tax issues.
Thanks a lot, Brad. I've spent a significant portion of my career working with sales and use taxes. I've worked with companies ranging in size from the Fortune 500 down to the small mom-and-pop operations, and almost all of them seem to have experienced some degree of complexity in complying with Georgia's sales and use taxes.
Make sure you have both microphones.
Both microphones? Okay. Okay, they have trouble understanding the forms, computing the accrual on the large volume transactions. Some even have difficulties understanding their use tax obligations. I've seen and prepared sales and use tax returns for almost every state, and except for a few states that require multiple returns, Georgia has one of the most complex returns I've seen. The form requires that the sales and purchases be separated by county, and the separate component taxes that make up the local options, the education, the MARTA, the the homestead and special taxes must be computed separately, and the exemptions also are computed separately. And not only is this form tough, but the instructions leave a lot to be desired too. I know the first time that I prepared a Georgia sales tax return, I had to use a prior period return that somebody else had used as a guide. Many taxpayers that I know, I see them just putting numbers on a form, not really understanding what they're doing. I would suggest we change the form. If we show each county the amount of total sales, exempt sales, and taxable sales, the Department of Revenue could back into the local component taxes. Another option is online filing, and I know the department right now is experimenting with electronic filing, and I haven't seen any of the product, but if they were to offer an internet interface where the taxpayer could go and drop in county by county the total sales, the exempt sales, and the taxable sales, I think this would make it a lot easier for the taxpayers to prepare the forms. Georgia, like most other states, has a use tax on items that are purchased from out of state, or for some other reason the vendor does not collect the proper sales tax. The problem with the use tax comes with keeping up with it, keeping up with the accrual, and it's not uncommon to find some large tax departments that have 2 or 3 people who are dedicated to managing the accrual and preparing the returns. The most common way of accruing the use tax is for the accounts payable department to book an accrual when the invoice is entered into the accounting system. And the problem with this is that you have a lot of inexperienced people making the decision on taxes. And this invoice by invoice method of accruing tax, it takes a long time. Large volumes of transactions and inexperienced help lead to inaccuracies. It can expose the taxpayer to substantial penalties for underpayment. It also makes the audit difficult. My experience is that most taxpayers just want to get it right. They not concerned about underpaying or overpaying their sales tax. They just want to get it right. Now, solution for the solution for the accrual would be to encourage more managed compliance. Allow companies to compute the tax based on the amount of expenses booked to specific general ledger accounts. A machinery repair parts account would be exempt. A supply account for the maintenance department would be taxable. And the appropriate tax would be applied to the total monthly expense for that account. When the department chooses to audit a taxpayer, they'd review the general ledger accounts to determine if the transactions going through these accounts are what the taxpayer says they are, and not perform an invoice-by-invoice audit. This would mean less time involved in compliance, less time involved in audits on both part of the Department of Revenue and on the taxpayer. An issue with small taxpayers is actually understanding their use tax obligation. And about a year or so ago, I gave a seminar for a group of small business taxpayers. And when I explained, okay, if the vendor does not charge you tax, you're supposed to accrue it. You're supposed to pay the tax yourself. And I had a room full of people with open mouths. They'd never heard of this, and they thought it was something new. Some of them thought I was making it up. And once I was able to come around and convince them that, yes, this is a tax and you're legally obligated, many of them just said, well, you know, Joe down the street's not paying it. Why should I? And it's a suggestion. What I recommend is the department put more of an effort in training sales tax. Now, I know that the department does have some sales tax seminars, and they are excellent seminars. In fact, they even publish the notices on the sales tax return, but for some reason, nobody knows about them. And a lot of people are missing the benefit of what the department is providing. What I'd recommend to the department is require. Somebody goes and registers for sales tax, within 60 or 90 days, you've got to attend a sales tax training class. Another suggestion is industry-specific publications. If you're a veterinarian, if you're a printer, if you're a retailer, you have certain issues, I would suggest the department provide specific publications indicating the tax aspects for specific industries. And I know Florida has tax specific publications that are very helpful. And I would just hope that Georgia would take Florida's lead and create a similar type set of publications. I want to hand it over to John Masters.
John, if you make sure both microphones are.
Brad and Keith have had a good bit to say, and mine will be short. In addition to what they've had to say, one observation I've made over the years, and I've heard these numbers more or less confirmed by other speakers at other locations, is that about 85% of our taxpayers can comply with the tax laws and do comply with the tax laws and really aren't any problem. There may be some mistakes here and there, but by and large any problems are processing and internal. For most of us, those are taxpayers who we prepare tax returns for and handle other matters for them as well, and by and large have no difficulty. There's 1 or 2% of the population who won't comply, refuse to comply, don't have to comply. It's voluntary, and they don't volunteer to comply. And most of us don't spend much of our time working with those taxpayers, so we aren't addressing those issues today. The other 15 or 20% where there are problems of one type or another is where I spend a good bit of my time, and that's where a lot of the problems come in with the processing and with people handling them. People have difficulty complying with the tax laws, sometimes because of things that happen in their lives, divorce, maybe it's marriage instead of divorce sometimes, illness, people have drug problems, they have accidents, they have a lot of other things. Some of the things that also happen is they are surprised. They find that an inheritance is actually taxable when they always understood they weren't taxable. And guess what? When they find that out, they've already spent all the money. Now they have a problem, or the Department of Revenue has a problem. And then there's a segment of the population who can't comply. They are not psychologically able to comply. They're not technologically able to comply. Their emotional capabilities won't allow them to comply. They just can't do it. They may be very good at some things, but not good at this. And those are the areas where we all try to fit everything into one system that everybody can do and where the system will work in every case. And that's never really going to happen. So somehow or other we have to deal with that other 15 or 20% of our population. And a lot of that, frankly, is the understandability of the tax rules. And anybody who's sat through what we've had to say today can realize that these things are not totally clear to some of us. And if we don't understand it, then the guy on the street who doesn't spend his time here won't have much success at understanding them. So these are the areas where we see and why we think that our tax rules, our laws, and so forth should be written for the taxpayer so that they may actually be able to understand and comply with the rules that we have. And one good thing, a lot of things have been said here that might be considered rough on the Georgia Department of Revenue, but the Georgia Department of Revenue does have one good program that they operate now. I didn't mean to say that only one, but they do have one at least. And that is their voluntary compliance program, where if somebody hasn't been complying and they want to get right and get back in the system, then they can do that, and that does work fairly well. And I guess to say one that doesn't work too well, the Offer and Compromise program, which is sort of a counterpart to the voluntary compliance program. It's on the books, but basically, as far as I can tell, doesn't work well, if at all. There are many other things we could talk about, but I'll stop here.
Well, I want to thank you, gentlemen. I know that looking out in the audience, there's glazed over eyes out there. There are a few CPAs on the committee here that may have understood a lot of what's going on, but you made a great comment. And I think it goes back to our tax code in Georgia. It is very, very, very complex, and it makes the issue of complying very, very difficult. And I certainly appreciate you guys coming in and illustrating this, even though I know to a lot of folks in the audience it does glass your eyes over. But I think it illustrates a very, very good point, is that compliance is an issue that I think maybe we as a legislator have tried to address. I know the chairman and members of the committee and the Senate committee, as we've gone through looking at omnibus bills, trying to do things such as make our state code more compatible with our federal code, less deductions, less additions. I know that from the Georgia Society of CPAs to the participation in the Department of Revenue are working closely together to see what we can change and how we can operate more effectively together to make these issues less taxing, less burdensome on the taxpayer. So there are a lot of different avenues, and I think we've got to look at this very, very complex and very large situation. Y'all just brought a whole host of issues together that I don't know. It may take a long time to digest. Mr. Chairman, I know there were some comments and some.
I've got 2 or 3 questions, but first of all, I want to say thank you for that scintillating presentation.
Knight, Representative Knight.
Yep, the chairman.
What I've seen in the federal code, in the old days when I used to do accounting, we had this thing called Package X. I always estimates on every tax form about how much time it ought to take the taxpayer to fill out that estimate. As the society, not as individual practitioners, obviously, I know there's no way to compensate for that, but as a society, have there been any similar estimates done for Georgia level, county level, city level tax compliance preparation that would not otherwise be necessary from a managerial standpoint? Purely deals with just payment of the tax. You aware of it?
Excellent question. I'm not aware of a study like that. I can tell you I totally disagree with the estimates on the federal forms. I think they're way, way under. And I really believe the estimates on the form doesn't account for information gathering, which obviously should be perhaps the largest part of it. Regretfully, understanding the law is the largest part of it. And I can just from the back of the hand tell you, Mr. Chairman, that from a business perspective, if you have a business that's multi-state, that's doing national activities, that the state compliance effort is as large as the federal compliance effort. And it's very profitable for CPA firms, but it's very, very complex and very costly.
I would be interested again, from the society, if there are suggestions of a specific nature regarding the overall burden of compliance, whether it be at the individual taxpayer level, business level, or corporate level, or whatever. Suggestions from the society, maybe through David or Thunder or others, or Senator Seabaugh, other CPAs that are in the legislature, that we could look at every year to see if there's anything we could do from a legislative promulgation standpoint that would make that easier, that burden less expensive, both time-wise and money-wise, on our taxpayers, and easier for them to pay the taxes. You mentioned the templates. One of your suggestions, and I thought it was a very good one, was there be a third-party, I guess, arm's length evaluator of the templates. Would the society be willing to evaluate the templates that are in existence now to sort of catch up, so that if we did inaugurate a program where there would be a third-party review process in that regard, both instructions as well as the template, to where you would be up to date on every form? Is that a mission or an undertaking that you think the society might be willing to fund the time and effort to do?
Yes, sir, Mr. Chairman, wholeheartedly. We'd be honored to do that and pleased to do it, and would. And we know there's a lot of different types of taxes. We would find the right participant to evaluate the ease with which the notice explains itself, and the response, the options for a response. We'd be happy to do that.
I'll hold you to that. And one last comment. I don't mean to beat up on our DOR, because they have an awesome responsibility, and obviously we can pick on them all day long, but they do have an awesome responsibility. But there is an issue that comes up from time to time that's very troublesome to me, and I'd be interested in your comments on this. When tax notices are sent out erroneously, or we discover after the fact that they're erroneous, they're wrong in any way, or they somehow avoided the filter system that's set up to catch them, there's a substantial cost incurred by the taxpayer, usually with fellows like y'all, to first of all determine this is wrong all along, and then get the ship back on top of the water rather than sitting. Who pays that cost now? And if I think your answer is going to be the taxpayer, why is that fair? When we get penalized as a taxpayer when we goof up on a tax return, why shouldn't the tax collector be equally penalized when they goof up on notices? What are your thoughts on that issue?
Let me answer it in part, and I'll let you answer it as well. You may have a different answer. Who pays for it? We all pay for it. The tax return preparer usually eats that time because, it can be negotiated who pays for it. But oftentimes, these nuisance notices that are erroneous or whatever, we usually run interference for our clients, and our clients look to us as being like an insurance policy, if you will, toward getting it right, and we will run that interference. Now, maybe that's just my firm's answer, may not be the right answer, but either we pay for it or the taxpayer pays for it. And you're right, it's not fair. I don't know how you necessarily quantify that, but I like where you're going with your question. I'd like to turn it over to Mr. Masters.
I appreciate you raising that question, because it's one of the questions that really bothers me, because we pay for it and the taxpayer pays for it, like Brad said. And the thing that is annoying about it is that the taxpayer never gets, I'm sorry we made a mistake, I'm sorry we goofed, here's your penalty and your interest on the money and a refund for the expense that you went to because of our error. We've heard on one occasion that someone was fired because they made a mistake that generated a lot of notices. And I mean, you know, that's okay if that solves the internal problem, but it doesn't do anything about the perception from the taxpayer's perspective. And the attitude, of course, that I think we'd like to see is that, well, you know, we all have to pay taxes and we all make mistakes, and that's okay. But we shouldn't have a system where we get beat on when we don't do what we're supposed to, but we don't even get an I'm sorry, we made a mistake when the shoe's on the other foot. If that's where you're going with your question, well, I think there's a lot of feelings like that in the public.
First of all, let me thank you, gentlemen, for what you do. I don't know what I'd do as a businessman or personal without my personal CPA, and I appreciate all of you. 2 or 3 observations. The Georgia Department of Revenue's budget is 1/2 of what Florida's is. So it's nice to say Florida can do all this stuff. If we appropriate double the amount of money they're getting, they'll be glad to do it too. So that falls kind of back on the Georgia taxpayers. Secondly, we have created, in my 26 going on 27 years I have seen this, we started off with a 3-cent statewide sales tax, went out 4, and we've given our local government some options to go up and down in state and sales and use tax. Some counties, believe it or not, are still at 4. They don't have any local taxes, and then some go up to the maximum amount, above that. We've given it for schools, we've given it for SPLOST, we've given it for other things. So if you buy that if I buy a Coca-Cola in Webster County at 4 cents, if I buy one over at Plains, Georgia in Sumter County, 7 cents. So, it varies with sales and use tax. All that said, let me ask you this. How much money are we losing? Georgia merchants and retailers are losing to internet sales. And what suggestion do you have for recouping that for the Georgia merchant and the Georgia retailer? And let me preface this, and everybody on this panel, House and Senate, knows in the last 2 or 3 years we've been through enormous battles on the sale of wine, believe it or not, on the internet. I mean, is it right for our local liquor store here in or country club or whatever here in Griffin to pay it, and we order it from California, or not? And we've had a battle and we've had a thing on it. Same's true with automobiles, same's true with books, same's true with everything. Is it fair to the local car dealer? Is it fair to the local merchant or so forth? How much are we losing as a state sales and use tax, and or what's the remedy for that, and can the state government address that, or does it have to come on a federal level?
I couldn't quantify that amount for you, and that might be a question you ask for the man that's sitting behind me. But as far as a remedy, there's the National Streamlined Sales Tax, which is an effort by many states to work together to collect taxes. And I would encourage that Georgia participate and go along with the Streamlined Sales Tax initiative.
Senator Seabaugh.
Thank you, Representative Nunn. I appreciate it. And while there may be some glazed looks in the audience in here, can you imagine us standing in the well trying to explain this to the members of the General Assembly and the glazed looks we'd get back from them on some of this stuff? I really appreciate when people bring issues and also propose solutions. And one that I'm very, very interested in that I would like some feedback on, if you're aware of states who have the way that they do their sales tax collection or their sales tax forms would be a good model for us to look at. I would really like to get some of those examples for us to look at how we can improve the way Georgia does it. But if we have something that will help us, give us a direction which way to work to explain what changes would need to be made technically to be able to support that, to do that, I would really be interested in getting that.
I'll put some examples together for you and make sure you get them.
Great. Thank you very much.
Thanks.
Thank you. Other members of the committee, Representative Tomlin.
Mr. Dixon, you mentioned one time in the single factor report about unused tax credits because of the most recent change. Would you even maybe, you talked about selling these tax credits, could it possibly, instead of being on Form 600, you could take it to payroll tax, or do you think it'd be equitable to change it to other monies, a credit in other areas of tax revenue or tax payments? We had a bill similar to that this year where Delta couldn't use all their credits, and they wanted to transfer. A bill was proposed to take it to payroll tax.
Well, that proposal is out. I mean, it is law in some states, and I can't tell you which. I can't give you an example. I'd be happy to do that as asked about the sales tax comparison, what other states are doing. I know there are other southeastern states doing that, and there's so many credits. I mean, you've got the low-income housing credit, which obviously is part of the program you were mentioning, Representative Tomlin, I'm just not prepared to really go into depth on that.
We set entertainment bills 2 years ago, if you remember, 9% credit for bringing movies and TV shows back to Georgia, and 3 more if you employ Georgia people, and 3 more if it was in a tier 3 or 4 county. And those credits for the first time could be sold. I think one of the remedies you suggested is the ability for the corporations having the credits, which otherwise may not be able to use them since they won't have taxable income because of the reapportionment potentially.
Correct.
That's where the declination of the value might have been, and we really don't know that for sure yet. But if they could sell the credit, they could still get 100% benefit.
Correct.
I think we could think it's strong.
That's one more. Because you had business tax, you mentioned the network tax. I mean, we're always looking to you fellows as being representatives of the taxpayer. If you have 2 entities that are exactly the same, a C Corp or an S Corp and an LLC, and the C Corp and S Corp pays a net worth tax, but an LLC doesn't, do you get comments from people about the fairness of that?
We do. I mean, there's a limit on the net worth tax, $5,000. So your larger companies don't really care that much, but people do ask, why is there a difference? And it just is. And, I think the preponderance of new organizations now are limited liability companies, not because they don't pay net worth tax. It's just probably an easier way to do business.
Representative Martin.
First of all, I want to thank you for your comments on the federal tax thing. For all these years, I've been one thing. It says the average person takes 2 hours to do this form. I thought I was above average for a number of reasons. Well, it took me longer. I was above, Mr. Chairman. So I'm glad to know that I've been more in the mainstream than I thought. I wanted to go back and just something you said earlier in your presentation, and we don't mean to beat up on the department, certainly, but because they just implement the laws the legislature passes. But it speaks loud to me when you have somebody that finds it more economical to pay interest and penalties and go through an audit process than to comply. And I guess it's not really a question other than there's probably other instances out there that our code's causing that. And that's one of the most important things you brought to me today, to look for those things, because that's going to make our Department of Revenue more efficient, where they can go do things that would be more productive for them. And it's certainly going to make the taxpayers in Georgia, I think, feel better about everything if we can identify more of those opportunities. Because if the cost of compliance is higher than the interest and penalties and
My pleasure.
Are there any other questions from the committee and legislators? Well, we certainly appreciate your report. I know it brings a lot of questions and a lot of issues to light, and thank you. We look forward to working with the society and as maybe we tackle some of these issues going forward. Thank you.
Thank you.